For our next tutorial video, we'll now see on our main screen that we've created a Madison County farm, and we'll start to populate all the information that's necessary to complete the basic information of the farm. To do so, we'll click on that Madison County farm, and we'll see that there are 5 input screens. This video will focus on the first of those, farm-specific data. We'll click into farm-specific data, and here you'll see a screen that's asking us about information about our owned land, our rented land, our non-grain income and expense, farm level title settings, and report controls. We'll go through those one at a time. First, we'll hit the edit button to allow us to edit and input information into the screen. Let's assume, for our example, that our farmer has 500 acres of owned land. Assume this land has been in the family for many years and they've got relatively modest land debt, and the mortgage payment is $60,000 annually, broken up equally between interest expense at $30,000 and principal payments of $30,000. Assume that this farmer has property tax bill, annual bill of $15,000. And in order to maintain the property, spends approximately $5,000 a year on land repairs. The next section relates to rented land. Let's assume that in addition to the 500 acres that our farmer owns, our farmer is renting 1,500 acres for a total of 2,000 farmed acres. For these 1,500 acres, the farmer can enter these either into straight cash rent or in variable rent. For now, let's assume the farmer is paying straight cash rent for those 1,500 acres. So we'll input those 1,500 acres here. And we'll leave variable rent acres and the floor and cap at their existing defaults. Then this next section, non-grain income and expense, is designed to allow the farmer to incorporate activities into their farm budget other than grain farming, other activities that might produce income for the farm. For example, if the farmer had a cow-calf operation or receives rent from a wind farm or has another side business, this is where they would input those revenues and expense items. Let's assume that our farmer has a side business that produces $50,000 in revenue and has $40,000 of associated expenses with that side business. Next section is called farm level title. Here the farmer will enter the number of approved FSA individuals or entities. For many farm operations, the farm will have a single approved entity and will then be subject to an annual cap of $125,000 on combined total ARCO and PLC title payments in any given crop year. Some farms, however, have structured their ownership and operations in a way that provides them with multiple approved entities, thereby increasing the number of limitations. For example, a farm that was owned and operated in partnership by 2 family members would likely be deemed to have 2 entities for FSA purposes. And this farm would be subject to a total cap of $250,000 instead of $125,000. For our farm's example, we'll assume that this is a sole proprietorship and there's only a single entity approved, and we'll leave this at 1. This next box is something called a sequestration percentage. It's basically a tax on these title payments that the government charges, and it's been in the last few years around the 6% range, most recently at 6.2%. That's a reasonable assumption. We'll leave that in place. And again, that is a deduct to a calculated PLC and ARCO payments prior to imposing any TSA caps. Finally, there's a section at the bottom entitled Report Controls. This last section allows us to travel back in time for the planning phases of the crop year. Recall, we're looking at a 2023 crop year. Although we're producing the tutorial here in August of 2023 for purposes of our demonstration, let's pretend that our Madison County farmer was in the planning stages of the 2023 crop year and was about to finalize crop acres decisions, crop insurance decisions, and title decisions for the spring planted crops. In Madison County and across much of the Midwest, the crop insurance projected price discovery period for spring planted crops is the average of the daily closing harvest prices over the month of February. Once that projected price is discovered and volatility factors are finalized as of March 1st, farmers must then finalize their annual crop insurance decisions by March 15th, and they are also required to finalize their title elections by March 15th. So for our demonstration, let's time travel back to March 10th. To do that, we'll click on this box, which is using manual controls to set the date, and we'll select our date of March 10th, and we'll update it. We've now completed this screen, and we'll move on to our next tutorial.